Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, March 16th, 2011. Well, folks, the markets opened slightly lower, rebounded to gap fill, and then you saw a major collapse in the markets. The markets are getting hammered now, although slightly off the lows of the day. Dow Jones Industrial Average is down about 159 points. NASDAQ is down 30, S&P 500 is down about 15. I'm going to explain every little nuance about what's going on today. We got some ugly housing numbers this morning. That didn't help the markets initially. In addition, we got some other news on inflation from PPI that was very, very high as well. So again, those combined with the fact that you saw oil going up a little bit today, more unrest in Bahrain. Saudi Arabia seems to be sending in some troops there. That's causing a little bit of nervousness. Japan was overall quiet early this morning as the Nikkei rebounded about 5%, but you did see a little bit of extra fear there. I mean, there's still that underlying worry what's going to happen ultimately in Japan. But aside from that, again, the Japan situation a little bit quieter, and that helped the markets really not have any major drops. And again, the Nikkei up 5% helped as well. The markets opened a little bit lower on those worries and the housing data and the PPI data this morning, and initially saw a little bit of a minor sell-off to this key little pivot low. Now, in the intraday stock chat, I said that was a buying opportunity right there for a short-term intraday trade, and sure enough, it worked out perfectly as the markets rallied all the way up. Now, as you came into the 20 moving average, you actually kissed gap fill. If you take this low pivot and draw it across, you can see a little bit of a kiss of gap fill, and that was the high of the day. Now, just using technical analysis, we know that gap fills are always going to be key resistance levels, and this turned out to be no different, folks. The only difference maybe with this one is that the ultimate sell-off in the markets was unbelievable. We saw the spiders drop $2 in a matter of less than 20 minutes, folks. Less than 20 minutes. Basically 15 to 20 minutes, the markets went from 128.57 all the way down to 126.51, which happens to be a pivot double bottom. Look at that perfect double bottom there, folks. And again, you hit a double bottom, you should all know that that's support. Just like gap fill is resistance right here, this is going to be support. Look at the monstrous bounce that ensued here. A bounce of over $1 on the SPY alone in a matter of minutes as the market rebounded. Now, really, what caused this big sell-off? Because the markets, honestly, were very light in volume on the first hour, hour and a half of the trading day till about 11 a.m. So what changed? Essentially, what happened was an EU chief energy player came out and made some comments that there were things in Japan that were going to get out of hand here, or they are out of hand. It's essentially a catastrophe, and he made it kind of seem like things were being hidden or things were going to be coming out in the next couple hours that were going to trigger a massive sell and cause some major new news breaks on this whole subject of what's going on in Japan. Ultimately, those were refuted by the media. The media quickly came out and said this energy official knows nothing that no one else knows. There's nothing going on here. The EU actually recently just refuted it as well, saying this person was just commenting on his views. There's nothing more. But either way, it shows you how the markets react. And the markets reacted unbelievably bearish on this little bit of a tidbit kind of speaking quote from this energy official in the EU. And again, the market's dumping $2 all the way down to this double bottom. The bounce was huge. You got a bear flag. The market's then sold off. And again, it's interesting because even though that comment was refuted and said, listen, it was just opinion, nothing new, the markets again are showing you multiple amounts of kind of stress and panic because they're not really rebounding back up here. If the markets were neutral to positive in the sense of psychology, meaning that people were still okay with the markets and kind of where we were earlier today right here, when those comments were refuted, you would have seen the market rally all the way back up to this level here. That has not happened, and that again shows you that there's a lot of weakness. Now, volume is starting to disintegrate again, which to me gives me an upside bias. I do have a short-term upside bias the rest of the day from these lows. You did hit a double bottom, and you hit it again here, and it held. The markets are now floating off of it. Volume, again, look at the volume decrease here. That's going to give you a neutral to upside bias for the remainder of the day. But I think it's important to recognize that even though those comments were refuted, the market hasn't bounced all the way back up to those highs, and that still shows you the panic in the markets and the fear about what is going on in Japan, what's going on in the Middle East. Now you have inflationary issues here in the U.S. You have housing data that was just flat out ugly, almost the worst we've seen all time. I think it was second to worst data we've seen all time in housing data this morning. And again, it's just showing you that home builders really have stopped building houses. I mean, there's no reason to build. There's so much inventory. Foreclosures continue out there. There's really no reason to do it. So, again, that was very, very negative. But, again, I think as the volume lightens up here, the markets are going to float back up, assuming no new news comes out. Now, there were some great trades today, folks. I mean, amazing trades out in the market. We're still seeing gold and silver slightly higher, but just up slightly on the day. Oil, again, let's take a look at the USO. This is the United States Oil Fund USO symbol there. And you can see this is up a little bit. It was up drastically. Then when the markets dumped, that dumped as well. Remember, any issues in Japan are global effects. Not only will Japan demand less oil or have less of a demand in the oil front, but also the rest of the world, if it causes the rest of the world to slow, that could hurt oil as well. So oil took a big dump on that. It's recovering a little as, again, those statements were refuted. Interestingly enough, if we go back to the Spiders S&P 500 ETF here, the SPY, I think it's important to recognize that as the markets dumped to double bottom here, a statement came out from the Federal Reserve that they extended their open market operations to 11:45. Well, 11:45 happens to be right here, folks. Right here. And basically what the Fed was saying by extending their open market operations is that they were propping the markets up and extending their propping throughout those comments to ensure that the market did not break down. So anyone that does not believe in the plunge protection team, that the Federal Reserve is actively involved in keeping the markets up, is literally not in touch with reality. I mean, the Fed literally came out today and said, it is true. We're extending our propping of the markets to 11:45 today because of what's going on. And again, remember, that's POMO, which again is part of QE2. If you take QE2, the 600 billion, and divide it into individual days, it's called permanent open market operations. And the Federal Reserve clearly stated today they were extending that our open market operations to 11:45, which again was going through this period. It was supposed to end, I believe, at around 11 o'clock. 11 o'clock is when the markets dumped. They saved the markets by continuing those operations. And again, notice the bear flag. They keep the market up until 11:45. At 11:45, the open market operations end, and the market starts to sell back down to a double bottom, and now is holding that double bottom. So again, please understand, folks. I mean, it's reality. It's reality. The Federal Reserve is involved here. They've been involved for quite some time. And again, you probably have seen multiple crashes, attempts at crashes saved because of the Federal Reserve. Now, again, it's artificial. Ultimately, it will fail down the line. But right now, it's working very nicely as they continue to be involved, all right? Now, the other thing to mention here, folks, as well, is that as the markets chop around here and you're starting to float up, you obviously want to pay attention to the double bottom here, triple bottom area at 126.50. If that level gets taken out and you close below it and confirm, the markets will have a big breakdown in progress there, and you would look for continued selling Thursday and Friday, which is options X, obviously. We're watching Friday very closely. But either way, markets are holding inside of the low from yesterday, which is very significant. And in my opinion, as long as you hold inside of this, the markets, you can have us neutral to upside bias the rest of the day. All right. A couple other things to go over here. Let's take a look at the GLD. This is the Spider Gold Trust, the ETF for gold, which is GLD, the symbol. And obviously, you can see initial up move very nicely. But as the markets weakened, so did gold. And again, it's interesting to see how usually when panic ensues, gold and silver would go up. That's not the way it's been lately, folks. Over the last couple days, ever since the Japanese issue, the earthquake, the tsunami, the nuclear meltdown-ish type stuff going on there, you have seen the gold and silver sell with the market. All right, and again, that was clear yesterday with a big sell-off, and even today, once the market started to sell, now as the markets are floating back up, so is gold and silver. So again, you're not seeing that safety store right now in gold and silver. It's more of a regular asset that's getting dumped when the market's dumped as people are going into cash or other positions. All right, very, very fascinating stuff going on here for sure, guys. All right. Now, let's go to the silver, SLV, iShares Silver Trust, ETF for silver, symbol SLV. And again, you can clearly see that this sold as well and is now floating neutral. Now, I think I'm actually more bearish on silver than I am on gold. And while many people have been bullish on silver, I've been more bearish because of this one aspect. Ever since it was up in this $33 to $35 range, I've been bearish. And the reason I've been bearish, folks, is simple. It's more of an industrial metal than a store of safety. So when the economy could be slowing because of Japan, it makes me believe that the silver demand actually could lighten itself just a little bit based on that industrial side. Now, granted, it's still partially a store of safety, so it will always have an underlying bid, but it's risen so much. If you look at the daily chart here, the move up has been so drastic just in the last, really since February. I mean, if you take the February pivot low in late January at 26 and move it to 35, I mean, think about that type of move. The pullback here, yes, it's holding the 20 moving average. If I zoom in, you can see it a little bit better. If silver takes out the 20 moving average right here on a closing basis for a day, this will collapse, and in my opinion, it's going to 31. Possibly even down to the 50 moving average at around 30 bucks. So just watch that 20 moving average, this yellow line right here. That's going to be your pivot side. If you're on this side, watch for more downside on a closing basis, remember. And if you're on this side, then it could still float up a little bit. So technically, it still could float up, in all fairness, but I do ultimately think it will break down in the not-too-distant future. So keep an eye on that. All right, let's take a look at a couple other things. Some stocks that are getting hit today. Apple Computer got downgraded to market perform from market outperform by JMP Securities. And again, ultimately, these are your levels on Apple Computer. You're going to have major support between 126 and 123. Major support on Apple there. It's also the flat line for the year. Gap fill, also this pivot low. And if you take that on the downside, you're going to 300, even number, 200 moving average. So that's key as well. Google is also getting very, very interesting down in this level. This is your major support on Google. It's not far off. I would say if it hits the 200 and pierces the 200 to about 547, 548, that's going to be your level to watch for a bounce. So it still has a little bit more downside, in my opinion, to go. Although it is hitting this little pivot low, I would just like to see it get through that pivot low to this next line or the 200 right in there. All right, and again, we'll keep a very, very close eye on things as we are obviously watching this market like a hawk. Markets, again, are hitting some sell-offs today. You do have Amazon and Baidu positive, and again, BIDU symbol there, Amazon AMZN. But overall, markets continue to be on the weak side, although starting to float up little by little. And again, you guys know, I just said it earlier, we are seeing a little bit of a positive, or I do have a little bit of a neutral to positive bias in this market. We'll see how it plays out the rest of the day. The only way I'd go into a neutral to negative is if you take out this and confirm below the pivot double bottom. As long as you stay in this range and it doesn't take out yesterday's low, the reversal is still intact, and you can continue to watch for a little bit of support there. All right. Scanning through, financials are weak. JP Morgan, Goldman Sachs, Wells Fargo, Bank of America, Morgan Stanley all down. We are seeing some key moves here in Hewlett Packard, taking a look at HPQ. HPQ is actually getting semi-interesting down in this lower level, folks. I do think there's a good amount of support right around $40. This pivot gap fill on Hewlett Packard, and HPQ is the symbol there. So that's something to watch. Let's take a look at oil again. Oil trading up about 28 cents on the USO. That's the United States Oil Fund symbol USO. And again, a little bit of a choppy trading today. Again, more so based off the market and the weakness. Once the weakness came in, oil did dump on the fear from Japan. All right, so we will continue to watch. Any news breaks over the next 24 hours to 48 hours into the end of this week are going to be huge in terms of this market. If we go to the dollar's trading just up slightly today. It had a big move yesterday, then sold off all day, closed flat. A nice gap up, sold, and then kind of rebounded here a little bit as we continue to see fears from Japan and global worries kind of be in the Middle East and so forth. A lot going on, folks. I can tell you, it seems that the U.S. is really the quietest area right now in the globe, as you have Japan, major issues, Mideast, major issues, and the whole issue in Europe is really not going away based on defaults and a lot of the countries like Spain, Portugal, Italy, Ireland, and Greece. All of those issues, guys. Big, big stuff going on. Okay. Other than that, I'm trying to think if there's anything else that I think you guys need to be aware of here. But I think right now it's just following the levels on the charts. It's been a fantastic trading day, fantastic scalping day. The swing trades continue to be in excess for plenty of trades out there. I just want to remind everyone there's a free trial of the Research Center at inthemoneystocks.com for you to test out. We encourage you to come and do it. Take a look at In the Money Stocks and take the free trial of the Research Center and or the intraday stock chat. Take care. Have a great afternoon, folks. I'll talk to you later.